Hey everyone, how's it going? Happy Monday. I've realized that a lot of the times I'll start recording a video and talk about something and it's just so all over the place that I'm like, you know what? I'm going to just start over. I wanted to talk about AKAN because of kind of the run up it's had with the news about weed and talk about how you could get kind of torn up in some of these moves. I think that one thing that I've been trying to look for is entering positions off of indecision. So once I get confirmation, basically, that there is shorting activity taking place, entering the position at that point. But in the case of a con, and this is like a situation that arises a lot where you'll have really positive news. You'll have a stock that has spiked in the past, and float rotates so fast, there's so much volume that there's no true selling pressure, even though you might see some profit taking. So, like here, this candle, we just, we go from $3 to $3.95, right? And then on this following candle, this is like a bearish candle overall, but the volume's overwhelming. But entering short here isn't like a horrible idea, and risking the highs, playing the lows. The RR just isn't very good. If you risk the close of the candle at 407, you're risking, 50 cents, 60 cents, maybe even like 70 cents. And you're looking for about 70 cents. So it's 1 to 1. It's not as good. So, like, do you take this trade? I don't know. Then you have this bullish action. You don't really have that big drop until here. Now, what I used to do is short above these areas, but a lot of time you don't get there. So I honestly like the idea of taking a starter position here and risking highs. But then we just don't move. And I don't really know what was happening during these candles. Maybe it was halts or something. But then you have, an open up here, and it's like, it's going to break out. But every candle has a story. And when you have these kind of pockets where there's a lot of volume traded and there's clearly selling going on, shorting into those pockets and above those pockets can be very lucrative. So we reach above there, start having indecision. At this point, especially after this candle of indecision, it makes you think that it's ready to dump. But the problem is when you continue to have indecision and consolidation and volatility contracts, because in those situations there could be pretty massive breakouts and you could get burned. So this one and many stocks like this that kind of slow grind up and don't really have the sharp sell-offs tend to kill shorts, especially these like long wicks where every dip is getting bought up and it just fades extremely slowly. These are horrible for short sellers. So whenever there's a pattern like this, it's pretty safe to say you could start accumulating in these areas where price is just slowly dropping. I don't really know what you could risk in this situation. I still am trying to think about that. Periods of consolidation, just averaging into them can be really good, especially on like a stock like this. Honestly, at the end of the day, especially for like more advanced traders, all that matters is what you see on the chart, what you see in the time and sales, and the level 2. If price is struggling to break down like at every price level, you want to get out of that shit as fast as possible if you're short. But if you're long and you recognize that, you could just average into it pretty safely because you know that there's not going to be a big drop. Whereas like when you start seeing indecision and you start seeing those wicks on the higher end of the candles, that's when you want to be interested as a short. So knowing the price action signs of, okay, what does it look like when we're getting rejected? What does it look like when there's accumulation happening? What does it look like when it seems like there's buying pressure forming? That's kind of what you have to Those are the patterns that you have to recognize. All of these indicators and everything is like, okay, how do I filter my criteria down? How do I find the setups? But to be completely honest, the stocks in play are going to have very specific price action, very high liquidity, very high volume. And the way you play them, whether it's short or long, highly depends on the price action you're seeing. And you may want to reverse positions. You may want to switch your bias based on what you see. I think especially for these stocks that are so heavily traded and dominated by algos, it's a lot harder and more difficult to predict what's going to happen. Like this candle, you could tell that there was some selling pressure. So when price reaches this area, you may want to be interested in a short. Whereas these candles have a bunch of indecision. So it's really hard to know what you might want to do there. You could say that like, oh, this candle's bearish, so you might want to go short after it. But then the candles following it don't really confirm that bias. So you might want to flip that. Say, okay, this isn't really selling off as I expected. I was expecting a short drop, but it's not. It's holding. I'm seeing accumulation. I might want to flip long. And playing to those kinds of shifts, I think, is important. I don't think that there is one set, this will work every time. You have to react to the market live and place probabilities as to like which outcome is most likely to happen and structure your position to plan for that. One thing that was pretty interesting, I was at work today and I was thinking about like Bitcoin and kind of the chart overall. Say, you're long Bitcoin at 77,000 and there are two possible outcomes. Either it goes to 40,000 and you cut your loss, or it goes to 200,000 and you take profit. The likelihood that it'll go to 200,000 versus 40,000, it might be more skewed to the bullish side, right? That's my bias, is that Bitcoin is more likely to go to 200,000 than 40,000 from these price levels. But that doesn't take away from the fact that there could be a 50% drawdown at any time. There could be a cascade event and 50,000 gets tapped, and then you go to 200,000. So even though the probability that Bitcoin would go to 200,000 may be higher, which one happens first may be a little different. It could hit 50,000 first and then go to 50 or 40, whatever it is, and then go to 200,000. And the timing has a probability as well. You want to prepare for, you have to have that kind of horizon in your mind of how long am I comfortable holding this? Am I comfortable with my capital allocated to this as much as it may be versus another asset? And can I sit through the drawdown periods? Whether it's to the short side, to the long side, it doesn't matter. But that's kind of how to think about a trade. And there's so many ways to plan a trade. You could dollar cost average, you could lump sum and dollar cost average. You could, with options, you could do so many different strategies and play it in so many different ways to achieve a better return than the overall market. So it's just some things to keep in mind that I was thinking about, especially with Bitcoin. Like I was like, okay, then what about the probability of it going to zero? Like, let's say I'm targeting a 2x. If I lose 100% of my investment and Bitcoin 2xing from here is 140,000, like, I think that it's more likely to hit 140,000 than zero. So why not go all in, So there's a lot of thoughts and a lot of ideas. At the end of the day, it's like, yes, that's like a good trade idea, but what if it takes 10 years to get to 140,000? Then it's like, okay, what's my return on capital there? Whole lot to think about when building a portfolio, building something. Like, I want cryptocurrency exposure, but what if banks start adopting everything that cryptocurrency is doing and it completely ruins its use case? well, then I might want to be long bank ETFs to take advantage of that. So that's like a hedge in its own sense. So there's so many trade ideas. It's important to like keep walking through them. And that's why AI is such a good tool. It's because you could bounce these kind of ideas off of it and be like, okay, how do I structure my portfolio in a way that captures every scenario and produces that return and minimizes drawdown? You could have the conviction. Anyways, I just wanted to talk about that. There are so many levels to investing, and it's really important to experience all those levels, from short-term trading to position trading, swing and long-term value investing. And being able to master all those, I think, is where true wealth comes from. I would love to get to the point where I can day trade and be out of all of my positions and not have to think about my positions when I go to sleep. But I think I have plenty of things to learn still, and I'll get there eventually. I think at this point, it's a matter of what happens first. Do my swings and long-term investments pay off first, or do I figure out a way to automate short-term trading to the point where that works out first? So anyways, thanks for watching. Hope you enjoyed this video. As always, leave a comment and let me know if you have any questions. And peace.